All right, well, welcome back to the Two Regular Guys video cast that we do once a week. This is Mark and I'm Trent, and each week we put out a video and we talk about the macroeconomic world, the geopolitics, as well as we get into the charts. Mark is the chart master. I'm into the macro and why everything is falling apart perspective. And today we're going to start out with the macro side of things, and then we're going to jump into charts. And we also requested some stock ideas that you guys wanted to hear more about, and so Mark's going to hit on those as well at the as part of this presentation. So let's get going. One of the things you and I probably talk a lot about is inflation and buying power of our dollar. And I don't think a lot of people really understand that relationship. And so I wanted to show you what the US dollar looks like in comparison to the euro dollar exchange. So that's euro dollars are dollars that are outside the United States. And those dollars are used to transact business pretty much mostly throughout the world. Wouldn't you agree, Mark?
Yeah.
Okay.
In fact,
And
I think they say there's more dollars outside the U.S. than in the U.S. That's what I've heard.
Okay. So, like when China buys goods and services from other countries, the majority of the time that is exchanged with it using euro dollars or US dollar outside the United States. And one of the things, you and I have been talking a lot about is the cost of inflation and the deflation of the US dollar. And when you stack those on top, you go to the grocery store, you don't get as much as you used to. And so this is a chart of the US euro dollar rate as of yesterday, the 22nd of April. And presently, our dollar, US dollar, is worth 93 cents to the dollar. So it is buying 7% less or has 7% less buying power presently than it did than it you would think it would be. And so when I think of going to the grocery store, and probably anybody else watching this, you take in account that you're only buying 93% of what you used to buy probably back when Nick's during the when we were on the gold standard at the time. That fluctuation in value of the US dollar, as you can see, going back from May of 23 till present day, has fluctuated a lot. It peaked right around October of 23, but since then it's been on a downhill slide until just here recently, last month, where we saw the US dollar pop back up, but we're still don't have the buying power like we used to. So the other thing we're seeing is in here in recent is an increase in US credit card delinquencies by 90 days. We're hearing more and more is that people are going to the grocery store, they're going to the store, and they're paying with a credit card. Whereas back after the pandemic, we all got mailbox checks and people were flush with cash. And so savings rates were high. Credit card delinquencies were basically nil. But that has changed since 22 or fourth quarter of 22. And we have seen a pretty drastic increase in the 90-day delinquency rate. And this basically says that people who have credit cards are maxing them out and they don't have the money to pay for them. And that's pretty significant, especially when you go to the grocery store and you're buying your groceries for your family on a credit card, not cash, and you're not able to pay that down. At some point, people are going to max those credit cards out and they're not going to be able to go to the grocery store. And you're going to see that sort of come about and really push us over the bell curve in a sense.
I think that we see that credit card debt now is over $1 trillion of personal credit card debt now.
Yeah, I mean, that's a big number to
And it,
conquer.
and it, yeah, and you think about when you look at the rate, it's not the Fed rate of 5% that you're paying. It's 20, 30% that you're paying
Yeah.
on these credit cards.
What's crazy is I get credit card applications all the time. and they have like heated up the amount I'm getting. And we give our kids mail as well, and they're getting offered these cards. And when you open them up and you flip over a couple pages into the application, you notice like the annual rate is like 33%.
Right.
I'm like, that is just a trap. Uh, you're just going to get trapped. There's no way unless you really hit some money or you find just buckle down, maybe sell a house or sell a big thing and you pay them down. But I think you're starting to see that in like last week's Bank of America earnings, where they said the delinquency rates on their credit card business is starting to escalate. Well, and it's because people just don't have the money they used to, and the cost of living is just really gigantically jumped.
It's almost like they're loan sharks. I mean, I can't even believe it's legal to charge that much on a credit card in these days and ages, but they do. And same with, when you look at delinquencies, tie this in with car delinquency payments, and at
Yeah,
what point are we going to start seeing mortgages delinquencies go up too?
right. And it's sort of like, well, mortgage delinquencies, let's jump into that one as well.
Oh,
Mortgage
there you go.
delinquency rates are up 21. Mortgage delinquency rates by 90 days or more are up 21.28%. I believe this is from second quarter of 23 to today. So that's a year over year number. As you can see, we didn't have delinquency rates back when we were all flush with cash because the government was sending everybody mailbox checks. Well, now that has declined or has increased. And today, 21% or 21.28% of mortgages are 90 days behind. I mean, that's a pretty gigantic number if you really think about it.
Well, and tie into that, that we're having increases in home insurance if you can even get it. I know down in Florida, they're canceling a lot of policies there in California. And not on, and top of that, you're seeing property taxes go up, by 50 to a double percent, and so
Yeah,
that ties all into your payments too. So people's if your payment doubles, your income usually does not double. So
yeah. I mean, I saw this TikTok this morning, and it was this young finance lady who has a finance channel on TikTok, and she was commenting on Dave Ramsey's comment about Gen Z living at home with their parents and how he felt that was awful. And she came back and said, "Well, here's the difference between when you were 30 and now being 30 years old." And you just and take just in account what you just said about the homeowners insurance, why the cost of that just going up, by 50% in some cases. I know I experienced basically a 50% or 25% increase in my homeowners insurance last year. Um, and I live in Florida, which of course I'm getting hammered, and I know you experienced something similar to that as well. And you're in, flyover America, middle of
yep,
America.
yep.
Yeah. So why don't Gen Z, buy houses? Because you can't afford them.
Well,
I mean, it's pretty
well,
logical.
the price of houses have skyrocketed. Their insurance has gone up, mortgage has gone up. Their salaries haven't gone up that much to make these down payments or payments.
Yeah.
What are you
Well,
going to do?
it's like my daughter who's 20, will be 24 this month, and she would love to buy a house in our area, but it's just unless we see some sort of housing meltdown in this area, it's going to be tough for her, and she's going to end up buying something that who knows? I don't know if she'll be ready to have that mortgage payment along with the homeowner's insurance cost, plus just to upkeep it in the state of Florida. And I think that's why you're seeing more and more of the rental market continuously being the place where young people go. And it almost makes a lot more sense because you don't have to fix your AC and
Why
you
not?
don't have to
There's some
pay all that.
there's something to be said about that. I mean, up where I'm at, you don't have to cut your grass and you don't have to shovel your snow, and
Yeah.
if something breaks, you call the landlord and say, fix my water heater.
Yeah.
Uh,
So unless we make housing affordable for a younger generation, the whole rent for life kind of aspect is a real high probability that we will continue to see that for sure. So this is the IMF PPI index. So Robert on the Platinum Channel often talks about this because he's in the manufacturing business. This is presently at 50.3. So to give you sort of a context of how to read this, anything over 50 is productive. We're seeing it's a positive when it comes
expanding.
to producing products and service or products, manufacturing products. It's when you get below 50 that when you start seeing manufacturing drop, that means there's less demand for products and services. We have been hovering around this 50 mark for, well, uh, quite a while. This goes back to 2050, so you can see the journey we've been on, but we're basically flatlining right now. It's come up in the last 6 months or so, but it still isn't a what I would say a bullish economy in at this point. It's probably not until we break over 55, 60 that we would see more of a manufacturing higher demand for products and services. And with the cost of money, and like what was it I saw today, another company filed, big name company filed bankruptcy, chapter 11 today. It was Express, the men's and women's clothing company. You
All
often
right.
saw them in malls and stuff. Well, they finally filed Chapter 11 this week. And so there's less demand for their product, which is clothing for both men and women. So that would come into factor into this number because now all of a sudden the demand for manufacturing clothing in the United States is now declining. Not that we manufacture a lot, but we're not importing as much as we used to because people just don't have the money and the cost to buy anything is ridiculous.
Well, it's interesting if you go to, you know, restaurants or anything, they're not as full as they used to be. And I have friends that own restaurants, and they're closing up earlier because they just don't have the crowds, and people don't stay as long, even if they are busy. And I was just noting, we were out last Saturday down in the town we live by, a pretty good sized town, capital city. Uh, Went out for someone's birthday at a Shogun, and it was okay, busy in Shogun. But when we drove back across town, Saturday night on 8 or 9 o'clock at night, there was hardly any traffic, and
Wow.
that's odd for a Saturday night. From
Yeah.
my experience of being here, and it just I don't know if people are staying in, they don't have the money or what. And we went over to a little pub that we go to, and it wasn't full at all. On a 9 o'clock on a Saturday night, and it used to be before the pandemic, and it's just I haven't seen it recover. And those are just things you notice. Living your normal life.
Two
That's what
regular
two
guys.
regular guys talk about. Yep.
We're just trying to make it happen. All right. You want to get into the charts?
Yeah. Let's look at what's happening. We'll do some. I'm going to need to put this chart up.
Okay.
We'll look at some charts, see what's happening.
All
We've
right.
had the last couple of weeks in the indices, or the last 2 weeks. A couple down, well, a lot of down opportunities.
Yeah.
Uh, and the last 2 days, and this is a daily chart that I'm going to bring up,
Okay.
is basically we're seeing up. We're seeing it go up. But here's where we started our big run back in October of 2023, and we stair stepped up. We still have some gaps down here. Come up, stair step. We came up. We hit pretty much a intermediate resistance level, curved over. You can see the 9, came back down, followed the Bollinger, and we're coming right back, up to the 9. I'll make this a little closer here so we can see it on the S&P. And we're not back yet. We got the MACD still not crossed. We've got the RSI still under 50. It's come right up and it's hit where we can see sell orders at, and that's where it's hit right now. We'll see, but again, we're still not back where we needed to be on the S&P. Even though today's an up day, and this is Tuesday at
Mm-hmm.
the time we're doing this. Now the Dow is only 30 stocks, and it's actually gone back up yesterday and came back across the 9. But again, we're coming right up. We're hitting not only where the sell orders are, but where the intermediate resistance level is. We have a little crossover. So we're seeing a little bit of improvement in the Dow. But again, can it get across this sideways pattern we've seen right along the intermediate resistance line? And it looks like we have sells there. And then we go over to technology. And again, technology has popped up a little bit today. We were following this Bollinger Band down. Okay. And then it's bound to pop within it. We're still not to the 9 yet. We have cells right above that. And again, another intermediate resistance level to see if we can get across that. But, you go back and take a look at charts when you think the day is really good. Go back and take a look and just, see exactly what's happening. And like here, we broke out of a wedge, an ascending wedge. We've come down. We've almost come down to where I thought we would come down to. We'll see if we come back up, hit a bump, and then come back down. And you'll see that quite a bit in charts, but we're still, below the 20. And again, on the Qs, the MACD is looking pretty bad. We're having a little bit of turnaround in the stochastic, but we'll see what happens basically with these charts.
When you're looking at these more from a long-term perspective,
Right.
that 9-period simple moving average, is that sort of I mean, every time I look at it from a long-term perspective, I use that 9, the 20, the 50. I throw in the 90 and you as well as the 200.
Right.
But that 9 seems to be like that really first line in the sand from a long-term perspective. And
Well, 9, yeah, the 9 is 9 days. It's an average
yeah,
of the past 9 days.
right.
When I look out a little bit further, I kind of watch the 20. I don't even see on my long term, I don't even have the 9 in on this one. I
Gotcha.
just have the Bollinger with the 20. And the Bollinger is kind of cool because each band goes about 2.5 standard deviations from the mean, which is the 20.
Mm-hmm.
Okay, so you can see how once you get above the 20, it can hang up there for a while, bounce back down. But 20 is kind of the line there, and here we've dropped way off of the 20. If I go
Right.
back to regular, like we were talking, here's where the 9 is. You can see it's a little more detailed,
Yeah.
on the 9. Um, but yeah, I mean, it just depends. And the 9 is a very short-term indicator along with the 20. A lot of people use just the 50 and the 200. I
Yeah.
mean, I like them all in there so I can just kind of give it a judgment,
Right.
of where I want to go.
So it's
So anyway,
so
it's interesting because, when people say, I dropped, let's go to this one. This one came back up. This is pretty popular. SMCI.
yeah.
Okay. We had this huge drop on SMCI. Okay. So we went all the way outside of all the moving averages. And when you get outside of it, you're going to come back in at some point. You can see today we're up uh, 6.5% or $47. Okay. That looks really good when you're just looking at it on the chart or on a screen. If you come back in, all we did is come back into the Bollinger Band. We're still way below the 9, the 20, the 50. Okay. We still have a MACD that's down. We still have an RSI that's soft. So unless you're day trading, okay, which we don't do, we swing trade. This chart still isn't, conducive to me saying, yeah, I see something good, other than I see, 3 days of maybe some support right along this line. But that's
Mm-hmm.
just to get back to the Bollinger. And we'll see if this Bollinger continues down or what happens, but one day does not make or break you at this point.
Right. In my opinion, it's like you need a positive higher high close today. You need a higher high and a higher low close tomorrow, as well as a higher high and higher low close to get 3 of those days to get some momentum going higher. And then you're going to start to run into resistance. So this turn, or a lot of people I know have, said, oh, okay, well, it turned yesterday, it pivoted a bit yesterday, but from what I can see in that candlestick, we're below the highs of the day. So that isn't a turn. Nothing's been proven yet that this is going to go back up.
Not to me, it hasn't. I mean, and if it does, it's going to have to, go over my 9 at least before I get even excited about on a swing trade
Yeah.
getting back in here. And again, I just work on swing trades and technicals for the Platinum channel. So if it's investment, would be a totally different way to look at something like this. But I
Yeah.
would still use technical indicators
Oh,
to give you an
absolutely.
indication of where to get in or get out, even on an
Well,
investment.
well, it's like I was talking to somebody yesterday about the swing from fundamental analysis from, before 2000 to technical analysis is now roughly 80 to 90% of every trade is made based on a technical
Mhm.
level or technical indicator. And so fighting that whole fundamental technical, war in a sense, right now the technicals are working. And if you're investing from a long-term perspective, you know, I mean, I look at this, was it NVIDIA?
This is NVIDIA. Yep.
Yeah, long-term perspective, it's just trending down. So
Yeah.
yeah,
After going sideways for a long time, right along the intermediate resistance level. So now it's just kind of, we'll see what happens. But, um, you know, to me, again, NVIDIA's, once it gets above here, I've got too many resistance levels above with cells and the intermediate to really make this anything that I want to look at this point. For me personally, and I have my own trading guidelines, and they're on the Platinum channel. You can go read them, and but I encourage people, whether you're investing or trading, have some guidelines or some a trading plan or an investment plan that you stick to. Otherwise, you end up all over the place. I call it the little kids soccer syndrome. Okay,
yeah,
you ever been to a little kid soccer game? You've got positions, forward, centers, goalies. But when the ball gets thrown out there, they all run to the ball. Okay, and
yeah,
the only ones that are left are the goalies standing by the net, and all the kids are running around. That's what I call, looking at some stock people. They all run to the stock, and they
right.
don't really stay in their place. And that's what a trading plan does. It makes you have a plan and stay in your place.
Yeah, I think and that applies both from a short-term perspective
Yep.
to a long-term perspective. One of the most famous we reference often is Paul Tudor Jones and his decision to get out of the housing or out of the market in general back prior to the housing crash was he just simply used the 200-day moving average. And
Yes.
this is a guy who manages billions of dollars. I
Right.
mean, I look at that and I go, it's not that much more complicated. And when you see a company like NVIDIA, who is basically topped out and went sideways for what most of the first of the year, or actually probably February to April, and then all of a sudden it starts trending down, you can't fight that. I mean,
Yeah.
until that trend gets broken to the top side, does it become something of interest? Until then, it's just headed south. And if you're going to the whole buy it and hold it, oh, it'll come back. Why will it come back? That's
Yeah.
the big question. That's a
Right.
variable. That's a what if. You can't figure out in these days and times. So
Yeah. And
yeah,
sometimes it takes an unknown event. I call it unknown market conditions, something that comes up. Let's say I'm in oil, and oil's going high and we just had this, in the Mid East, there's some issues,
hmm,
and then all of a sudden, today you see a news story comes out and someone from Iran says, okay, we're not going to retaliate for what Israel just did. Well, oil prices dump. Okay,
right,
you still have the same amount of oil, the same amount of production, but it moves on the news and it dumps. And
yeah,
part of my trading plan is I don't like to hold swing trades over the weekend just for that reason.
yeah,
Because the U.S. stock markets, even though they're talking about it, they do not trade 24/7. Um, when Iran attacked Israel, the crypto market was open, and you saw Bitcoin and all the cryptos die. Well, it
right,
was it was a good thing for some of us crypto buyers because it provided us an opportunity, to get into Bitcoin at 62, 60, 61, 63, where it
right,
was trading at 69 before. And you're going to
yeah.
see that if we do go into a 24/7 uh, stock exchange, that's going to be wild and
Well,
interesting.
I saw, was it on CNBC.com this morning? I think it's the New York Stock Exchange is they're considering a 24/7
Yeah,
exchange.
there's a if you go to market news in our Discord, we put a story in there. There's a startup that's trying to do that. Uh,
Okay.
they actually applied for 24/7, so that kind of made the New York Stock Exchange say, okay, we better look into this. And
Well,
you think about it, everything's electronic now. You look at the floor of the stock exchange. There's like three guys, pushing mops around and looking at a
right.
chart. It used to be packed and everyone's yelling and screaming. There's no one there. You could do 24/7.
Yeah.
The crypto market does it.
I believe it was Steve Cohen. He's the uh, head of big time trader, a legend in the hedge fund world. owns 0.72 capital, and
That's
now
the
owns the New York Mets.
that's the one. That's the hedge fund that's putting up for the 24/7.
Oh, it is. Okay.
Yep.
So the 2 years ago, I believe it was him who invested into a 24/7 concept or whatever. I think it was out of the Caymans initially. But um, here's the thing, though, that concerns me about something like that. You can see this in crypto, and that is you go to bed. If you're, let's say, just everything went 24/7. Okay, so you're, Bob and Jane, 58 years old, you're just outside of retirement, and your money's invested in the stock market. All of a sudden, your retirement planning just became a volatile kind of scenario because there is no breaks in time to reset and prepare. Instead, you could have, like we saw with Israel or Iran bombing Israel, and you saw the crypto market, Bitcoin you referenced from what 69 to what 62, I think, or 61, it got as low. And it was pretty much overnight. It wasn't during the day. So while you're sleeping,
I was at a bull riding championship
yes, you
watching it.
texted me.
Yeah.
Yeah.
Yep.
I mean, how does that affect if everything went to 24/7? And I agree, everything's done technology, through technology now. What what are the ramifications for, I mean, how much volatility goes up? How does the ramifications of these companies and
I
of these stocks?
I think it'll make the news cycle more interesting because now you can kind of Warren Buffett puts out his earnings on Saturdays because the markets are closed, and people can think about it.
Right.
Now, if something happens in the middle of the night, I'm a train. I own a railroad, and my railroad goes off the track and then into a little town and spews noxious gas everywhere at 2 in the morning. Then at 2 in the morning, that stock's going to go down. But if I'm a normal and an investor in the ETFs and things, long term, like it's in my 401k. That one stock won't kill me. Okay, it'll
Right.
it'll just you're it'll be fine for people who are diversified. But if you're doing swing trades or you know day trades or any kind of trading, then you have to be like I was saying crypto. If you're going to swing trade in crypto or trade in crypto, you better have some stops and things set when you go to bed because
Yeah.
and we talked about that too. A lot of people put in buy orders in crypto, over the night and over the weekend, way below where price was when they went to bed. Because sometimes it'll come down and hit that, and next morning you're like, wow, I just hit something at 52, and now it's at 62.
Right.
Yeah.
Yeah, I think it brings in that whole risk management element because now, because of how the world functions and how volatile our world can get overnight because the rest of the world is up, I think even a long-term investor has to take into account, you know, these outside of ordinary, situations. How do you protect yourself? How do you prevent, being, 6, 7 years out from retirement and all of a sudden you get a blow up of some sort? And it just, in my opinion, we're getting closer and closer to something of that
Well,
sort.
let's just say that today the way it's running, something big happens overnight or over the weekend, and you've got your portfolio there, and you've got your ETFs, and it's you got your bond funds, and you got your mid caps and small caps, and you got this and that. If something happens overnight and the market tanks, or it does a crash like it did in '87,
Yeah,
there's nothing you're going to be able to do anyway because when that market opens, it's gonna gap down, all
right,
that. And some of our members learned this week what happens if you have a set order below and it gaps through that, it automatically triggers it, and you're
right.
out. Um, so there'll be no different than that. I mean, there's nothing you're going to be able to do about that,
That's true. That's true.
and yeah.
And chances are, after, if everything went 24/7, after a while, things would normalize to some level. And hopefully, long-term portfolio management would adjust to accommodate such volatility. Um, cool. Yeah. You want to get into,
Yeah, we had some people wanting us to look at some charts, I guess. So we'll
yeah,
go
so
look at
we
some charts
we sent
from
out,
our members.
I posted out on the Discord. If you're not a member, I actually, of our Discord, you should definitely sign up, even the free part, because I put this out to everybody on our Discord. But send it, I asked people to send out some stock ideas that they want us to look at, as well as I posted something on Instagram, and we got a couple from there as well. So Mark, um, take it away.
Well, this is ARC. ARC K was the first one that came up, and this is where we started the year, and we came down and kind of just went sideways. But you can see lately ARC has come down, and let me get a little closer here. It's come down below the 200-day moving average, which is right here,
Yeah.
which is very bearish. You know, a lot of people, if you were Paul Tudor Jones and you were an investor, you would have got out right there. Okay, came down and followed the Bollinger Band. Uh, Up until yesterday, we got a little bit of a close above it, and we came back up. And you can see here's the 9. 9 is now acting as resistance. So we're gonna, and we have cells right above the 9. So they have to get above the 9, and then you've got the 200. There's a lot, and then you've got the 20. Got a lot of resistance above. Look at the MACD is below the signal line. We've got an RSI below 50. You know, it's just, we'll see if it can get past, but there's a lot of, right now at this point, there's a lot of resistance to the top side. We'll have to see what happens. I'll
This
zip
is,
through these kind of, go
yeah,
ahead.
this is Kathy Wood's ETF, right?
That's right. Yep.
Okay.
And we have a lot of them. So I'll try to get through each of
Yeah.
them and make sure. So here's net list, and this is one that a lot of people are interested in. You can see we've crossed over 3 days ago, crossed over the 9, and we have a nice crossover of the MACD. The stochastics up. We're a little bit low at that point with the RSI, and we're kind of just hitting around the 50 level. So we've come up, we've got above the 20. So the next level of resistance is the 50, 20 is support. The only thing that I'm not really liking is right here, this volume. There's 107,389, 469. The volume is really low and light on this. So that bothers me a little bit on swing trading this position. But right now, you can see, you know, here's your support and here's your resistance. We're still under the 200.
Okay.
APLD. You guys got a lot. APLD is interesting. We just popped today above the 9. This is Applied Digital Corporation. This is a small $2.79 stock. I don't normally trade in these, but you can see we've come down. We've hit basically the intermediate support level, and I see that this is just as important to me as this intermediate resistance level. We've come down, we've flattened out, the 9 has come back over. We got a nice little pop today above the 9. If that closes above the 9, and we still see some strength here in the MACD, and we get the RSI. So strength, the RSI is at 38. We really want it at 50. We can see some momentum change, 1, 2, 3 days up. You're going to have some sells at least today. At 301, 307, and 307 would be the 20.
Oh, okay.
What I'm seeing. So 301 for some sells. Let's look at the volume. Got 1.9 million, 2.7. We're doing good on that. So that's Applied Digital. And none of this is financial advice. I'm just looking at what I see in the charts.
Right. So nothing we say is a recommendation or financial advice. You definitely need to do your own due diligence before investing.
This is NVTS, and this is only a $3.74 stock also. But we see the same pattern. It came down, it hit the intermediate support level for 3 days, and we're just bouncing across it. We're still below the 9. 9's right where we have sell orders. The MACD is not looking good. The stochastic is just not all that good. The RSI is not that good. We'd have to see this thing climb back up. I mean, but you got to look at, you know, where the resistance is. 2 levels of resistance here, and then you've got the intermediate resistance level at 4.5. So it's really a matter of risk versus reward. But right now, it doesn't meet my trading plan to get into this at this point.
Okay.
Okay, let's go to now someone wants this is a crypto play, basically. This is MicroStrategy. Okay, so MicroStrategy is an interesting company. Michael Saylor, who is the CEO of MicroStrategy and controlling interest in MicroStrategy, has changed all of their corporate treasuries to Bitcoin. So they own over 200,000 Bitcoin in their balance sheet. So
That's
Bitcoin goes
actual
up,
Bitcoin, not dollar. Yeah.
actual
Okay.
Bitcoin.
All right.
So his company's tied to Bitcoin. At this point, we've been under the nine. We've been kind of following the 50 up. Today we got a little bit over the nine, but we're hitting the 20 as a little bit of a resistance. We've got some sells up here at 1460. Okay, and today we're at 1350. But we're seeing some convergence in the Bollinger Bands, meaning we're kind of level out here a little bit. Uh, but the MACD isn't there yet, and the RSI isn't there yet. If you're going to swing trade MicroStrategy, and realize that if Bitcoin goes from 70 to 62, you're going to see stocks like MicroStrategy follow that hit.
Yeah. It's pretty correlated to
Yep,
whatever Bitcoin
absolutely.
does.
Okay, and so this is IREN Energy Company. Here's
They're
my
actually a crypto miner out of
this is okay.
Australia. This is one of
Okay,
those
well,
I've been following.
okay.
Yeah.
So that's what they are. So this will be tied to crypto too. Then
Yeah.
you've seen like with the halving and everything, miners have really gone up. Where I see a problem here, so we've got the 50 flattening out. We've got the intermediate resistance level, and for the last 2 days, we've been hitting that level. Not that you can't get by it, but it's a hard thing to get by and stay by it. We are above the nine. We're above the 200. We got a nice crossover in the MACD. Stochastic looks pretty good, and we're above the 50 level here. But again, this is always my line in the sand. It's hard to get across that and sustain it. You see the cells are way up there. Cylinders at 610. And again, this is
Mhm.
a smaller, stock trading
Yeah.
under $6.
Yeah.
GCT. You guys got a lot of them. GCT is the same thing as what we just saw. This is 4 days of hitting the intermediate resistance level. Today, we popped up. And what we hit? The upper Bollinger Band, and now we're back down. So here's the nine is right here, and that's where we've touched. So we're really trading between the nine and the upper Bollinger Band. The Bollinger Band's rolling over. You really got to look at risk reward on this. Your risk is how high can it go before it hits resistance to the reward, how low will it go until it goes through support. Again, we're seeing a little bit of a rollover in the stochastic, which tends to be a predecessor of what we're going to see in the MACD. Okay, General Electric. This one here, I know we have some interest in. General Electric had a little pop today. We had some earnings come out, and earnings are normally something that can make it pop above this intermediate resistance level. You can see we've had 1, 2, 3, 4, 5, 6, 7, 8, 9 days of trying to hit that level. And so today we popped above it. We have a huge wick down to the bottom here. We'll see where this ends up. But again, this is an intermediate resistance level. It's tough to get past this. And I'm seeing, the MACD hasn't crossed back over as far as going into the positive yet. Our RSI looks pretty good though. Hold on 1 second. You have to cut. I gotta let this cat out.
Okay.
Okay, here you go. When they gotta go, they gotta go.
That's right.
So again, well, you can watch this, but again, I don't play around with the intermediate resistance level. We'll see how the day ends on General Electric.
I was surprised that one showed up, but I mean, a chart is a chart, right?
Yep. I mean, again, I check your emotions at the door.
Yeah.
Here's Tidewater. Tidewater is a $93 stock today. You can see we pop back up. Right here is the intermediate resistance level. Okay.
Hmm.
It's also where the cells are, and you can see that's where we are right now. Have to see if this can pop above that. It's hard to do. It can happen. We've done it. But we'll see. The MACD is not crossed over. We still have an RSI. Well, the RSI is above 50, so we have some momentum. We'll see what happens. Again, I don't play. I try not to play that close to the intermediate resistance level. I like to play down here where I've got all this field to run. Okay,
Right.
this is like being on the 1 yard line. You know, it just doesn't give you much room here to score. If
Yeah.
I'm over here, I'm on my 1 yard line, and I have 99 yards to throw the ball all over the field. You know.
Gotcha.
Okay, AMD. Oops.
Advanced micro
AMD.
devices.
Advanced Micro, and this is just I put in a here's your trend as your friend until it's not. Well, this is your friend to the downside right now with AMD. Uh, Again, we're just following the 9 all the way down. We haven't really crossed over it at all. We got a MACD doing the same thing. We got very little momentum at this point. So at this point, I would not swing trade at this point. AMD
No, I think that
semis are good.
until, yeah, I mean, even just intermediate to long term holding, it's going down.
Clean Spark, here's a $20 stock. But again, look what happened today. We popped up. The time to get in Clean Spark would have been back here, at 16.23, and today we're at 20. Get above that 9, and you see it right up. Now I'm right here on the intermediate resistance level, where I'm going to find resistance. You can see it just even moved down a little bit. Here's where some sells are, just in case it got up, and the sells are right below the converging upper Bollinger Band. Now we do have a nice MACD, a nice stochastic, but again, these lines mean something to me, and this is a line in the sand. Doesn't mean it can't get past there, but for me, I would rather play down here than play up here. And again, we're talking risk and reward. What's your reward? What's your risk?
Mm-hmm.
This is Poet. This is a penny stock. It had a little bump today, okay? But
Yeah.
it's been playing underneath the 9. Something happened, bumped it up yesterday, maybe earnings, I don't know. So now they've come up, they've crossed over, but you can see where it hit right on where the sells are, okay? So sell orders are kicking in, holding it right there. It's on the upper Bollinger Band. So, your support would be at the 50. You're above the 9. You're still below the 200. The oscillators are good, but how much more do you have to go on this one? Because you're already hitting where the sells are, and you're a $1.43 stock. Where's it going to go? How's
Yeah.
it going to get up? Let's go back and just look at, okay, here's Poet. Okay, we had a big dump, and it's basically been moving sideways, since February. Okay, so we're right back to where we were here, where we were here, where we are here. So, we got a 200 that's diving still. So again, where are you going to go with this? What's your expectation? And why do you think that's, uh, it's going to go any higher than what you have right now? That's
Yeah.
the way I would look at this chart. Same? Would you think same?
Absolutely. I think the other thing you got to take into account is on an institutional level, they are oftentimes they cannot buy anything less than $5.
Yeah.
So without that institutional umph, it's hard to push a stock higher. And
Well, and
so,
yeah, you're right. And then the other thing, watch this right here, this volume number right here. So the
uh-huh.
last 2 days, we're seeing volumes 2 million, 4 million, 41,000, 53,000,
Yeah.
26. I mean, the volume is just, there's nothing, there's no volume. Something
Yeah.
happened here. So all these people that buy up here, you know,
Yeah.
uh, these people here are selling up here. The people that bought below here are going to sell
Yeah.
and just don't get left with the bag.
Yeah.
And
Exactly.
again, I don't know if this company makes any money or not. I'm not looking at fundamentals at this point. I don't even know anything about this company, but I just look at the chart, and it wouldn't be something I personally would be in. The last one that I have, and you might have, this poor AHLer, it just can't get above the 9.
Yeah.
The 9, the intermediate resistance level, the cells are all so close I can barely see them. That's a lot of resistance, and it's just popping along the support level. There's just, unless something, and even earnings didn't pop either one way or the other. Okay, and let's go back. This is going to be painful too. Let's go back. Yeah, look at, here is, you know, where it used to be. Is it going to get back up to 51.88? I don't know. I mean, here's the 200.
Yeah.
There's nothing here for me to see that's anything good from a chart point of view. I'm trying here, Trent. I know this is one of your
I
dad's favorites, but
I
I
know.
just I just
It
I just don't see it.
fundamentally his thesis behind it makes a lot of sense. Fundamentals, you know, but when you just look at it from a charting perspective, it's been on a downhill trend. Could it pop up? Could we could see the Fed lower Fed funds rate, and we could see an explosion in cheap money, and these companies start building more data centers, and this company comes in to cool the places. Yeah, it could happen, but that's a what if. And right now, the what if that would drive this higher, in my opinion, is not there. We're not
Well,
going to see cheaper money. It's not
I
happening.
mean, here's a 2-year chart.
Yeah,
And if you had bought in back in 2022, you're back to zero. Oh, you're back to even. Okay.
right.
Uh, and in this area here, we're talking 8 of 2023, and it's just been downhill since then. And you know, if you get into a stock like this, what's your exit plan? Okay, what are you hoping? Are you hoping for this? Okay, are you
Yeah.
hoping for this? This was a double top. Okay, by the way, so so if you're going to try to get back here, how long is it going to take you to get back to that point?
Yeah. I mean, I think this
I
is
mean,
almost an abusive relationship.
yeah, it's I just I don't know. Anytime you enter a position, a
Hmm.
trade, an investment, you should have a plan. We talked about a plan. What is your end game?
Yeah.
Okay.
I think that's
What do you hope to get out? And in swing trading, we have an end game. Everyone has on the bottom side. I risk maybe 3% on the bottom side. We have some people that do 10%. Okay, you get out. And you don't have all this lost opportunity. Okay.
right.
I mean,
Well, and that,
if you got in at any point here, you're down. Okay.
well, think
Any
about
point.
this, Mark. If you had just, if you go at that 2 year chart and you said, okay, what is that? The red line's the 200.
Yep.
Okay. You had, let's say you had bought into this because of the upward trend it moved back in what October of, was it 22?
You would have bought in right here.
Okay. So you bought in
And
there, it's above the 200, it rides all the way up, it hits the 200.
so you get
And
in, it's 1360 you get in.
yeah, and then you sold out where? Right there?
Right here where it drops, 3731.
Okay, so you doubled your money. You take
Yep.
that money and you flipped it to like a 10-year treasury bond.
Or
You would
or
make you would be still up. You'd be making money.
or 2 month, 1 month
One
treasury
month,
bill.
whatever.
Yeah,
Yeah,
and find
exactly.
another and go find another stock.
Right.
Find another trade.
I think
Yeah.
that's the thing is, and coming from that long-term buy and hold world of 20 some years, when you break that 200, just a simple, 200, and you've
Yeah.
made all that money and all of a sudden it goes all the way down. I mean, you've got to say to yourself, how on God's green earth does it get back up above the 200? What
Well,
will
yeah.
it take to get there? And right now, it's not there. It's just not
Right.
there.
I mean, it's just luckily for the intermediate support level, it's going by.
Hmm.
But you've got the 9, the intermediate resistance level. You've got the cells. You've got the upper Bollinger Band. You got the 50. Like these are like rows and rows of linebackers ready to stop your run.
Right.
You know.
It's not until you get over the 50 does you get some, clean air to breathe, you know. And even there it's going to be a challenge. So I guess you think from a swing trading perspective, and I'm thinking all those people, the long-term perspective, intermediate, more than 90 days, long-term perspective, and the way money has been taught to be managed since I was born. And the world has greatly changed. And I think that's where having a trading plan or an investment plan that says, hey, I'm in this for the long run, but if it hits this point, I take action. If it's, to get out or to reduce risk exposure, that kind of thing. Hey, can you do one more for
Sure.
us? It's VST. Um, uh,
VST.
Yeah, a guy I know through another guy requested it on Instagram.
Okay, VST.
Yeah.
This one's going to be a fun one, I think. So we'll start out with a 1 year chart.
Okay. That's a big move.
Yeah. So look where it's at. It just went right up. It's again, it's above the 200. So if you want to do long term,
Yeah.
you've done well. If I'm swing trading right now, I'm looking at it again. When we get a little closer, right now, I'm right here, and we saw this. I mean, with everything, all the indices and everything, we got up and we went sideways on this market. And here's the intermediate resistance level. Here's your sells. Okay. You see today's price action got through a little bit of the resistance, but hit the sells and died. We've been seeing this for 5 days. Okay. It finally went down below the 9 and it's still below the 9. We got a bad MACD still trending down, a little bit of a blip on the stochastic, nothing yet. And an RSI that shows a little momentum because of today. We've got pretty good volume. We're above the 200. We're above the 50. Okay. We're still not above the 9. And I can't even see the 20s right there, too. It's a
Yeah.
little bit above the 20. But I don't, here's this intermediate resistance. What's going to get this to push through the line and go higher? Here it tried.
Yeah.
It failed. I'm seeing this 9. Zoom over and we'll see how it goes. But right now, I mean, why I'd want to play at this level, I wouldn't.
Yeah.
Okay.
I think, I mean, just even looking at all your other indicators are not pointing to a buy at this point. If you're in it and you were in it before this level, this is when you start to risk manage. This is when you start to maybe put some stop losses in to prevent losing your shirt and losing those gains that you had.
Yep. Let me go back to that. There's wheat. What was that? VTS?
VST.
VST. So let's just go back. If I wanted to get into VST based on my trading plan, it probably would have been right about in here as we crossed. Well, actually, it'd be a little further back because we never got below the 9. We've never had a full candle below the 9, even all the way back here.
Huh.
Look at that.
Wow. Yeah.
Okay. Well, okay. Let's say right here it was. So it's at
Yeah.
32.72 on October. That's when the market started going up. Okay. So
Uh-huh.
you got in BST. Okay. When the market started going up, 32.72. And you would have gotten out. Here's where I would, once it hit this intermediate resistance level, I would have gotten out. Okay. At 68.37. Okay. Or if you wanted to be purist and just get out when it fell below the 9, you would have got out. You might have got out today.
Yeah.
At 76. You would have rode that whole thing under my trading plan.
Yeah. Huh.
Now, see, that's why, it makes it, everyone looks at, oh man, look at what it did, but what's it going to do for me now?
Right.
Is the way you kind of look at it.
What is it they say? Past performance is not a prediction of
Yeah,
future performance.
yeah,
Yeah. I mean, I think if you go back and you look at like a lot of the big names that made a big move this first quarter of the year, the Nvidias, the SMCIs, stuff like this, that last 60 days or so, that topping, that rounding we're seeing has got to be an indicator of, hey, it's had a great run, it's starting to roll over, I need to be cautious, I need to take some risk management in mind and make some possible reduction of exposure, or put in some stop losses, or determine, okay, if it crosses XYZ period of time, I'm out.
Yeah. I mean, even Microsoft started doing a rollover a little bit. Today
Yeah.
we have a little bit of a pop up, but you're going to see that. You're going to see things come and come back up and test. Well, where is it at? Where is it stopping? Right where the sell limits are. Okay.
Right.
And right here's your intermediate resistance level. So it's between those two. And will it come back down? It probably will. Might come back down and hit the Bollinger Band. We're seeing nothing on the MACD yet. We're having a little bit of a pop on the stochastic, and we're still at 42 in the RSI, but we're seeing a little bit more momentum because of today. But we'll see what happens. We're still below the 9. We're still below the 50. We're still below the 20.
Yeah.
So, days like this, people are all joyous. We're up 1.38%. But, I haven't seen anything that makes me say, I want to get into Microsoft at this point. For me
Yeah.
personally, to my trading plan. Now, other people have a higher risk, but
Right.
don't just go and say, "Oh, Microsoft's up today," or look, Microsoft's down. It's a good buy now because yesterday it was trading,
Yeah.
$5 more. Now it's on sale. Unless you go and look at a chart like this.
Something that you always say is you don't swing trade into an earnings.
I don't
So
know.
for instance, we saw Netflix come out with earnings last week. Great earnings report, but it dropped the next day on Friday, what, 9.63% of some
Yes.
version of that, right?
Yeah.
Okay. So with your strategy, what you're talking about with swing trading, and is that you come into earnings, you don't know what's going to be reported. You don't know what's going to happen. So why take the risk? In the last two earnings reports with Netflix, you would have benefited. But in this case, third time, unfortunately, um, you got into an area, like you said, I think
Yep.
on Thursday or Wednesday, that you're in that intermediate resistance and sell
Right
orders
here.
are in
Yep.
there. Yeah.
Yep. Right here. The sell
Yeah.
orders.
And so it was almost predictable that this thing was going to unload at some level.
Well, I put it out on the Discord. These are some things that are different than the last two. And I
Hmm.
also went back to the previous two prior to that, which would have been a year ago, and those two went down. So if
Okay.
you believe first quarter and second quarter were bad and they correlate, this would have went down too. And so I just said, per my trading plan, I would have got out, and that's why I have a trading plan. Now, is it right or is it wrong? I didn't know at that point. Only thing
No.
I knew is earnings was coming out, but I didn't know what they were. And
Right.
this is what happens. And now we'll probably, we're coming back up. Everyone's like, we're up $20 on Netflix. It's coming back. Well, what it's done is come back into its
It's
Bollinger
Bollinger.
Band because it's traded outside of it. And you only trade outside or either side of the Bollinger Band 5% of the time. So it's going to come back in. Will it come back and fill this gap? Maybe. We'll see.
Yeah.
Okay. Will it come up, hit the 9 and then give us a little more bounce back down? I don't know. The MACD is telling me we're not ready yet to buy. Okay, the RSI is only at 40. Would I get into Netflix now? Probably not. Not to my trading plan.
Yeah. And now this week we've got some big earnings coming out. We got Meta, I think is tonight, Tuesday.
Tesla today, I think.
Is it
Tesla
Tesla?
after the bell. Yep.
Okay, so you got Tesla, you've got Meta, Google. Am I missing one this week?
That's it. That's it for this week. Here's
Okay.
Tesla.
I
Tesla's
mean,
been, yeah.
yeah.
I mean, it's just,
I
it,
mean, I think I look at Tesla, it's a car company. Yeah, I know it's technology, blah, blah, blah. But at the end of the day, they sell cars. That's how they make the majority of their money. And the whole car industry is under a little bit of a stress, you know?
well,
So
especially electric cars.
yeah. So I think this is one that I think is pretty much known. He's not going to be real excited about his guidance on the call. So this is something to be careful of. But Meta, I actually heard a research firm that I follow actually came out and said they don't think Meta is going to come out with great earnings, or at least the guidance is not going to be great. And Meta's been like banging it out for the last year or so when it comes to earnings growth.
Yeah, I mean, I just looked at Meta and it's just been on the sideways path since it got up to the intermediate resistance. This is just like one of the last to fall.
Yeah,
Microsoft fell. And we'll just see what happens. When'd you say that is tomorrow?
I think that's Wednesday or Thursday.
But see, we've fallen below the 9 on the swing trade here also. But
Yeah,
on an investment, they're still, there. Let's go. What was the other one? Google's out.
yeah,
Mhm. See, Google's just following again. It popped up, hit this sideways pattern. Today it's popped up above the intermediate resistance, but where did it go? Right here where the cells are. One, two, three, four, five. Okay.
right.
Um, again, kind of flatlined here on the MACD, the stochastic, the RSI. So it's going sideways.
Yeah. And you think
So
about
you
what
look
would
on,
drive Google higher, and that would be, they make a lot of their money off advertising. Well, if consumers are tight on money, I mean, companies are tight on money. So they're not spending as much. So the likelihood of Google taking off is probably slim to none
well,
because of what
the
drives
only thing I
that
could
business.
one thing I could see for Meta and for Google is if they say AI a lot, that may spark them. That may be the only thing that saves Apple too,
Yeah.
if they say AI, because I think Apple is now not the leading phone in China anymore,
No,
market
it's
share wise.
Huawei.
I just put that in the news this morning or last night
Yeah.
that Apple had fallen. So
Yeah. Pretty crazy. Well, awesome. I think that was a
that's
pretty good
that's a
review
lot
of what's happening.
for just two regular guys.
Yeah. We're if you guys don't know who we are, I'm Trent Grinkmeyer, and Mark and I have been in the business of finance I was in for what, 24, 25 years as a financial advisor. You were on the TD Ameritrade. Is that, and, or was that the name of the company at the time?
No, it was Ameritrade and AccuTrade.
AccuTrade. And so you were in the other side of the business. And we come from this perspective of just two regular guys who are trying to manage our finances and make money, and we apply it with a unbiased approach, and oftentimes tell it in a very brutal way. We both like technicals more than fundamentals, and so we read the charts and we read the behavior of macroeconomics and in markets. So we have a subscription service within Best of U.S. Investors. It's the Platinum channel, and Mark offers a swing trading program. Every Monday he releases a new updated swing trading list, and because the way Mark approaches this, his win rate is pretty incredible. Along with Kerry Grinkmeyer, who's the founder of Best of U.S. Investors, his belief of AI and the companies that are going to affect it, he approaches it from a what the future looks like, the fundamental side of things. And we offer 2 calls on Friday, both the Platinum call with Mark and I, and then Kerry's Zoom call, which is in the afternoon as well. And that's where all the tribe members get together, and we back and forth Q&A, and a lot of good things come from it. New services are coming in the future. We'll be releasing those on the Platinum level as well. And so check us out. If you have any other questions, leave them below. Leave comments or shoot a email to support@bestofusinvestors.com, and we'll do our best to answer those questions and help you out. But in the meantime, have a great week, risk manage, and enjoy life.
Yep. Don't lose money.
Don't lose money. Peace.
See ya.